We explore what it means to live in a world where work, wealth, and wellness flow from who we are, not what we're told to be. Web3 isn't just technology, it's a return to truth, a remembering that our connections are capital, that creativity is currency, and that every act of kindness is data the universe never forgets. So take a breath, feel your power, and let's tune together, because the future isn't waiting, it's already human. Market volatility, a signal of systemic transition. The crypto markets are delivering a sobering lesson in volatility today, and it's revealing something deeper about where we are in this transition. Bitcoin fell to $93,400 over the weekend, its lowest level since May, while Ethereum briefly touched $3,000. Right now, Bitcoin sits at $95,344, with Ethereum at $3,195. The Human Fear and Greed Index has plummeted to 17 out of 100, the most extreme fear reading since April. But here's what matters. These market swings aren't random noise. They're symptoms of the larger workforce and economic disruption reshaping how we work and build wealth. As AI continues displacing traditional employment and economic uncertainty grows, more people are asking, what if there's another way? That's where blockchain infrastructure becomes essential, not as a speculative asset, but as the backbone for human-powered microeconomies and community wealth-building systems. Why this matters to you. When markets contract, communities activate. People turn inward, strengthen local networks, and begin exploring alternative economic models, from homesteading to gig networks to tokenized community systems. The infrastructure question, will it serve human connection? What's driving the current decline? Reduced liquidity, shifting Federal Reserve rate cut expectations, technical patterns like the so-called death cross. Historically, this pattern has marked local bottoms rather than further crashes. But here's the real question beneath the price swings. Will blockchain tools serve human connection and community wealth, or will they amplify existing extraction? That distinction matters because the tools being built today will shape whether ordinary people can activate microeconomies in their own communities tomorrow. Now let's move on to XRP and the path forward, institutional trust building. While Bitcoin and Ethereum struggle, XRP is writing a different story. The token has surged 89% over the past year, currently trading at $2.27. This follows Ripple's SEC lawsuit resolution, their RLUSD stablecoin launch, and Canary Capital's spot XRP exchange-traded fund, which recorded the highest day-one volume for any ETF in 2025. Why does this matter? When institutions adopt blockchain infrastructure, they're signaling that these tools can scale responsibly. XRP's adoption trajectory suggests that blockchain-based payment systems and digital identity infrastructure, the foundation for localized gig economies and peer-to-peer networks, are moving from experimental to institutional grade. Next, security and trust, the human element. Behind the price action, serious infrastructure questions are emerging. The International Consortium of Investigative Journalists released Coin Laundry, showing how major exchanges like Binance, OKX, Coinbase, and Kraken are being exploited by criminal networks. Drug cartels, North Korean hackers, and people traffickers are moving illicit funds with greater anonymity than traditional banking allows. This raises an urgent question. How do we build blockchain systems that protect privacy while enabling genuine trust within communities? What you can do in your community. Demand that platforms and protocols you engage with prioritize security and identity verification. Support projects building digital identity systems that protect privacy while creating accountability, because trustworthy microeconomies depend on it. You can start building human-powered microeconomies in your own community right now. Join us in driving currency for humankind by visiting us at human.world. Next, the real story. systems that serve humanity. First, Singapore Exchange will launch Bitcoin and Ethereum perpetual futures contracts on November 24th, a signal that major financial centers are bringing crypto derivatives onshore with proper regulatory frameworks. When institutional infrastructure prioritizes security and accountability, it creates the conditions for human-powered systems to flourish locally. What does this all mean? As markets test new lows and regulatory scrutiny intensifies, the choice before us becomes clear. Will blockchain serve extraction or connection? The answer is being written right now by communities across America. People are activating their networks, creating tokenized economies, and building gig systems rooted in trust and mutual aid. They're remembering that our connections have always been our greatest capital, and now they have the tools to tokenize that truth into real economic value. This is the work of the new economy, and it starts in your community. The future of blockchain isn't just about faster transactions or more complex smart contracts. It's about creating systems that give people more control over their data, finances, and digital lives. When we prioritize human needs over technical novelty, blockchain becomes a tool for building the kind of world we actually want to live in, one where technology serves humanity, not the other way around.